Hello, today we are going to solve May 2022 paper question number 4. Marvin is preparing control accounts at the end of each month on 30th April 2022. The following were the balances. So let's head to the first question, part A. State 4 reasons why Marvin might prepare control accounts. So control accounts you are going to prepare because it's a part of the control procedure. Okay, so it is when you do this one of the control procedure, you are going to, it will help in reconciling the ledger accounts. Okay, you are maintaining a consistent ledger account. It also helps you to avoid any arithmetical errors, okay, which can occur in the double entry. Okay, it could have occurred in the double entry, so cost in the double entry accounts. Okay, it could have cost in the double entry, so it helps to prepare the accurate ledger accounts. Then financial statements, it also helps to prepare the, you get the total of the ledger balances which could be directly used in the financial statement, so it saves a lot of time. Then you can also use it, okay, like the owners can usually get the total of the ledger balances in one place in one account book, so it could often be used for reference. Okay, so that is the thing. Then prepare the trade receivables ledger control account for the month April 2022. So let's prepare this. So we know that trade receivables ledger control account, okay, it's a current asset account. Okay, so let's prepare DR, and this one is CR, and we have the found balances. Okay, so he says that on the balances, so the balance on the 1st April 2022, so balance on the 1st April 2022, okay, there was a debit balance as well as a credit balance. So let's write that. So balance BD, okay, balance BD brought down was 8,700. So it was 8,700, and on the credit side it was 250. So the balance brought down on 1st April 2022, it was this much. Then okay, then for the rest of the April, okay, for the rest from this rest of the April 2022, what happened was there was a sale. Okay, the sales was 11,500, out of which 2,600 was cash sales. So you will account only the credit sales here, so let's put that. So sales, so 11,600, 11,500 minus 2,600, so that is equal to, that's equal to 8,900. So let's write that. So 8,900, okay, was the sales that happened, credit sales. Then check received from the trade receivables, so were this much. So bank, so the bank he received 8350. So let's write that. The check received was 8350. Then what happened? It included 420 from the BLUC, which was dishonored by the bank on 28th April 2022. So dishonored check. This. it is also in the bank account only. It is called as dishonored. Okay, the dishonored was around amount 420. Then sales return happened. It was 800, included 250 cash returns. So sales returns. Okay, but here you will have to include 800 minus 250. So that is equal to 550. So that is 550. Then you have discount allowed. Okay, because they just they gave you some amount. Okay, they gave you some check. So the discount allowed for giving the cash was around 350 was given to the customers total. So 350 was the discount allowed. Then interest charge for overdue accounts. Okay, so the interest that got charged for the overdue accounts, this was in the this was around 80. So the business lost some 80 pounds. Then there was a contra entry. Okay, the business was liable to pay 52 G weeks. So this was set off here. So that's a contra entry. So contra. So it was around 50 pounds. Okay, so the balance of 50 owing by this G weeks was set off by the by G weeks to the business. It was set off by contra entry. Then irrecoverable debts happened. So we assume it has come to the business. So that's why you are going to put on the credit side. Okay, so 730 was the irrecoverable debt. So some sale happened, credit sale happened, 8,900, out of which some amount was received by check. There was also sales returns, okay, that had happened. And then you gave some discounts because they paid in the check. Okay, you can write it like in any order. So but the best way is sales, and then sales return happened. Then towards that, some people paid through the bank. Okay, what was the amount? It was 8,350. And then because they paid some cash, you allowed some discount. And also one person, he had a owing balance, and this was set off by the contra entry. So 50 pounds was set off. Then irrecoverable debts happened. This was assumed that it is never going to be recovered, and you place it as if it is recovered by the business. So the other things were, there was dishonored check and interest charge, which all became expenses to the business. Okay, apart from the current asset of credit sales. So then we have the balances. Okay, the debit balance is around 400. So after all this, on the 1st May, so on the 1st May we had some credit balance. So let's check that. So on 1st May 2022, the credit balance was 400. Balance brought down was 400. So this also becomes, okay, balance carried down by the end of April. Okay, 30th April. So this balance carried down was this much. it becomes 400. Now let's add up and see what was the balance brought down on the debit side. Okay. So let's add up 8,700 plus, okay, 8,700 plus you have 8,900, 8,700 plus 8,900 plus 420 plus 80 plus 400. So that will be 18,500. So the total on both the sides should be equal to 18,500. We know on the debit side the balance seems to be more, so we just assume that the total adds up to 18,500. Now minus of 250 plus 550 plus 8350 plus 350 plus 50 plus 730. Okay, that is 8220. So that is the balance brought down or carried forward. Okay, so 8220. Then prepare the extract from the statement of financial position showing the trade receivables balance at 30th April 2022. So let's prepare. So it's a very small 3-mark question. So the balance here, okay, 820. So in the trade receivables, it's a part of current account. Okay, non-current, it is a part of current asset. Trade receivables will be equal to 8220 minus the balance on the credit side, that is 400. So the balance will be equal to 7820. Okay, this will be the statement of financial position. In the statement of financial position, it's going to come under the current assets. Okay, current asset. So it's a statement of financial position at 30th April 2022. So this prepare the BLUC account in the books of Marvin. So the following transactions related to the account of BLUC took place. He is one of the Marvin's customers. So let's prepare the BLUC account in the books of Marvin. Okay. So BLUC account, he is also one of the trade receivables. BLUC account. Okay. So DR and here CR. Now the pounds, okay, we write that value of the currency at the top. We know that this is also a trade receivables account, so let's prepare that. So you should be aware any paid slash prepaid will appear on the debit side for this, and any owed, okay, balances will appear on the credit side because this is a trade receivables account. So the 1st April, okay, the Marvin, there was a balance brought down was 420. So let's write that. So the owed balance was, okay, balance brought down on 1st April 2022 slash D. Okay, it was 420. Then he, on 18th April, he sent a check to Marvin. Okay, on 18th April, a check was sent to Marvin. So the amount was 420. Then on 20th April, sold goods to B Luck, credit for 120. So some sales happened. So the sales were, credit sales were 120. And then on 28th April, the check sent was called as dishonored by the bank. Probably he didn't have money in his in the B Luck account, and so the bank declared it as dishonored. Dishonored check. Okay, so the amount was for 420. Then on 30th April, it was declared as irrecoverable. So it was transferred to irrecoverable debt account. Okay, so this is going to be transferred to irrecoverable debt. So the amount that was transferred will be 420 plus 120. Okay, this was some owed, already owed, and this was also sold. So the total amount that will be transferred to irrecoverable debt account will become 540. And then it is going to be transferred to income statement. So you'll close down that account. Okay, so now let's write this. So the total will be 420 plus 420 plus 420. That will be the amount will be equal to 960. Okay, so add up all this, so it will be 960. So 960, and this side also 420 plus 540, it will become 960. Now this is, you have to close down this account because that's what happened. Then on 25th May, later on in the he offered 0.25 pounds. Okay, he gave. So where will you write that? So 0.25 pounds on. So in the same account you will open and you will write. So there was a bank and it was around, he paid 0.25 times 540. So that was equal to, that is going to be equal to, so it's going to be equal to 135. 0.25 times 540, and this one you are going to transfer it on this to the irrecoverable debt recovered. Okay, so you will transfer it to irrecoverable debt recovered. Okay, so here also you are going to say that it's a closing account. You will transfer it to, you'll open the recoverable debt recovered account on that day and then transfer it to the income statement. Okay, so this is how you will do the account, and then you close it down by putting two lines underneath. Okay, because you are going to close down this account. And then we have evaluate whether it is ever possible for Marvin to avoid all irrecoverable debt. So yes, Marvin could avoid all irrecoverable debt if he sold only for cash. Okay, if he does only cash sales, then he will not have any problem. There will be no irrecoverable debts because there will be no credit sales. And also, what if he puts a good credit control policies in place, like he's able to remind the customers on before the due dates, and also if he gives some cash discounts for early repayments and stuff like that, then he will not have any irrecoverable debt. But however, we can see that not all customers will like to do any cash sales. It means he might lose out on some customers. He might also incur some costs, or he might lose on profits because if he is offering cash discount. Okay, and still customers might not pay back if they don't have money in their account, or if they are bankrupt. So in conclusion, you can say Marvin cannot avoid all irrecoverable debt, so he should have a good credit